It's tax season 2026. You're sitting at your kitchen table staring at forms you've filled out the same way for years. But this year, something's different. Buried in the middle of your tax return is a new line you've never seen before. Enhanced deduction for seniors, $6,000. You blink. $6,000? Just for being 65 or older? You keep reading, but there's a catch. If your income is too high, you lose it. And if you have foreign accounts you haven't reported properly, claiming this could trigger the exact audit you've been trying to avoid. Here's what most seniors and immigrants don't realize. 2026 brings the biggest tax changes in years under the One Big Beautiful Bill Act. And while there's good news, like that $6,000 senior deduction, there's also increased IRS enforcement that's catching people completely off guard. If you're over 65, if you're an immigrant with ties to another country, or if you're helping aging parents file taxes, the next few minutes could literally save you thousands of dollars. Or prevent a very expensive mistake. What actually changed in 2026? Let me cut through the confusion and tell you what's real. The One Big Beautiful Bill Act passed in 2025 created a brand new $6,000 tax deduction specifically for people 65 and older. This isn't replacing anything. It stacks on top of your regular standard deduction. For a single senior, that's an extra $6,000 you don't pay taxes on. For a married couple where both are 65 plus, that's an extra $12,000 you don't pay taxes on. This is genuinely good news. But here's where it gets complicated. The deduction phases out for taxpayers with modified adjusted gross income over $75,000 for singles and $150,000 for joint filers. Translation: if you earn too much, you lose this benefit gradually. And for many retirees with pensions, Social Security, and investment income, that $75,000 threshold arrives faster than you'd think. The foreign account problem nobody's talking about. Now, here's where this connects to something far more serious, and this is where immigrants and many seniors get blindsided. The IRS didn't create new reporting requirements for 2026, but they are enforcing existing rules more aggressively using AI and data matching technology. If you're a green card holder, naturalized citizen, or longtime resident who keeps a bank account in your home country, even a small one, you've always been required to report it. If you're a resident alien, you must follow the same tax laws that apply to U.S. citizens. You must report your worldwide income. The problem? Millions of people never did. That savings account in Mexico with $15,000, the pension you're still receiving from the Philippines, that property you inherited in India, all of it is supposed to be reported. And starting in 2026, the IRS is using advanced data analytics to cross-check what foreign banks report against what you're filing. The IRS is increasing use of data analytics to compare foreign bank reports with taxpayer filings. Any mismatch may trigger an automatic compliance letter. The two forms that trip everyone up. There are two reporting requirements that catch people constantly, the FBAR and Form 8938. The FBAR, or Foreign Bank Account Report, is required if the total value of all your foreign accounts combined ever exceeded $10,000 at any point during the year, even for one day. It's filed separately from your tax return, directly with FinCEN. Failure to file can result in penalties starting at $10,000 per violation, and in serious cases, penalties can reach 50% of the account balance. Form 8938 is different. Certain U.S. taxpayers holding specified foreign financial assets with an aggregate value exceeding $50,000 will report information about those assets on Form 8938, which must be attached to the taxpayer's annual income tax return. For most people living in the U.S., the threshold is $50,000 on the last day of the year or $75,000 at any time during the year. Here's the trap. Many seniors and immigrants have been ignoring both forms for years because nobody ever noticed before. But in 2026, with enhanced AI enforcement, that silence is ending. Why this matters for your citizenship application. If you're a green card holder planning to apply for U.S. citizenship, your tax compliance is about to become intensely scrutinized. Under U.S. immigration law, a lawful permanent resident who is required to file a tax return as a resident and fails to do so may be regarded as having abandoned status and may lose permanent resident status. During your naturalization interview, USCIS can now access IRS data more easily than before. If they see unreported foreign accounts, missing FBARs, or inconsistencies between what you told them and what you filed, your application can be delayed, sent for additional review, or even denied. This isn't theoretical. It's happening right now. What you need to do right now. First, figure out if you qualify for the new $6,000 senior deduction. If you're 65 or older and your income is under the phase-out limits, this is free money you should absolutely claim. Second, and this is critical, take inventory of any financial connections outside the U.S. Do you have a bank account in another country, even if it's rarely used? Do you receive a pension or Social Security type payment from a foreign government? Do you own property abroad or have investments there? Have you transferred money internationally? If the answer to any of these is yes, you need to understand your reporting obligations. Third, if you realize you should have filed FBARs or Form 8938 in previous years but didn't, don't panic and don't ignore it. If you've missed past filings, you may qualify to catch up under the streamlined filing compliance procedures, which allow expats to file delinquent forms without penalties if their non-compliance was non-willful. The key word is non-willful, meaning you didn't intentionally hide anything, you just didn't know. Coming forward before the IRS contacts you makes an enormous difference. 2026 brings both opportunity and risk. The $6,000 senior deduction is real, and if you qualify, it's a significant benefit that could save you over $1,000 in taxes. But increased IRS enforcement using AI is also real. The days of assuming foreign accounts will go unnoticed are over. If you're a senior with international ties, an immigrant maintaining connections to your home country, or someone helping aging parents navigate taxes, this is the year to get everything properly documented. Don't let fear stop you from claiming benefits you deserve, but don't let ignorance create problems that could have been easily prevented. Knowledge is protection, and now you know what matters.